Alright, good morning. Let's go over today's trade plan. So in the overnight session we saw that S&P and Nasdaq held up relatively well. ES held above the previous high of 1914 and above yesterday's breakout level, and NQ held above 37.26. So overall, buyers maintained control overnight. The only red flag right now in this entire upside move is the lack of participation from Russell. TF still continues to be pretty much range bound and hasn't really extended the gains like the other markets have. So, that's just something to keep an eye on today. At the very minimum, we don't want to see TF just completely breaking down. Ideally, it holds above 1135 to 1137 and continues to push higher. We have a recent swing high at 1145 and then some resistance around 1151 to 1153. So ideally, if the upside is going to continue in the other markets, then we want to see some participation in Russell as well. And if we don't get that, or if Russell starts breaking lower, then that would be a red flag and a warning sign. Now, buyers are in firm control above 1315, and as long as they hold that area, they can maintain control and push to a new high. The month of May has been a strong month in the market, and the way everything is setting up right now, it's set up to close on strength as well, and it's unlikely that we're going to see any big or any significant reversal on the last day of the month. Most likely we're going to continue higher. So on the downside, 13 to 15, important area. Below that, 09 to 11, we're using as the micro bull bear zone. So that's kind of the last spot. We don't want to see the market breaking below that, and buyers can still maintain control as long as at least the 09 to 11 area holds. So that's one thing to look out for. In the event that the market breaks below 1909 to 1911, we could get a move down to 03 to 05. Given the overall bullishness in this market, the expectation is for buyers to be active on first test of each support zone on the downside, and the 1899 to 1901 would be a range extreme, and the selling could shut off there and the market could reverse off that area. So right now we're not really focused much on the downside because given the overall bias, given the fact that the market is directional to the upside, we're not looking to short this market unless we see some very clear signs like a big shift in the internals or a big downside move and failure in the other markets. Now, with yesterday closing near the high, the internals are probably going to be flat to maybe slightly negative on the open. So, that doesn't necessarily mean that the market is bearish or, that we're seeing a lot of weakness. In order for us to consider the internals to be quite weak, we'd have to see a pretty strong move to the downside. So, the S&P advanced decline below minus 200 or minus 250, and the NYSE advanced decline below like minus 800. That would tell us that, hey, there's some significant shift in the broader market, and now we're getting some profit taking or at least some short-term weakness in the market. But if the internals are relatively flat or slightly negative, like minus 3 to 500 on NYSE advanced decline, or minus 100 to 200 on the S&P advanced decline, that value can change. On the econ calendar, we have Chicago PMI and consumer sentiment out today, and those can be triggers for short-term directional moves. So that's something else to keep in mind. And then once the econ's out of the way, I think after the econ reports are out of the way, if the markets are still holding up quite well, then we could just get kind of these slower moves, continuations to the upside. And on the upside above 18, there really is no hard resistance. This is untested territory. So the high odds objective above 18 is 21.5 to 23.5. But of course, the market does not have to stop there. It could extend higher to 25 to 26, or 29 to 31. These are all range estimates. They're not based on any hard resistance. So, for that reason, we're not really relying on these areas as much on the upside. They provide a general guideline, and they're good areas to take profit. But not necessarily areas where we're shorting. Above 13 to 15, we're not looking for any short setups unless we see some very, very clear and compelling reasons to short the market. Other than that, with buyers in control, we don't want to step in front of this. We're not trying to nail a top. I see a lot of people trying to do that, trying to, call a top or figure out that this could be it, and now we're going to get a big, pullback. Now, I'm not saying that that couldn't happen, but why predict it? Let it start, let the momentum start to the downside, and then you can simply short a bounce and still, take advantage of the move instead of trying to, call a top or nail a top, and then you take several losses along the way, and then by the time you finally actually nail it, either you've given up or you're not going to get much out of it. Or, at the most, you'll simply make up the prior losses. So I don't think it's really worthwhile to, try to call a top in a market that's making new all-time highs. I mean, this is uncharted territory. It's completely useless to try to figure out where this is going to stop. So, for that reason, we're not looking to take any aggressive short setups in this market. We're either looking to go long above the bull-bear zone, and as long as the market is holding up well, looking for a continuation. If there are very compelling signs that this market has short-term topped out, even then, I'd rather be cautious and conservative on the short side. Last day of the month, there could still be an extension higher, and typically a strong month, a strong week will close somewhere near the highs. It's not going to completely crash down. So, it's not a scenario I'm looking for. Right now, I'm really focused more on the long setups. Now, I'm still going to play defense on the long side because we are at these higher prices, right? So, for example, if I'm buying, pre-market support or even higher, I'm not looking to simply put that trade on and, look for my target, look for my stop, and just sit back. I am going to manage my risk more actively at these higher prices, and if that means I'm going to miss out on some upside, that's okay. But I don't want to, take a lot of risk at these higher prices. So, the setups are going to be conservative in nature, and the risk management is going to be a little bit more closely watched at these upper prices. So that's another idea to keep in mind. So aside from that, let's just see if buyers are able to maintain control on the day time frame today and close out the month on continued strength. Keep the econ reports in mind and take it from there.